Good morning, everybody. Happy Friday. We will look to get started here right at the top of the hour, about 8 minutes.
All the faces and all faces just where they disappear. I didn't come to question too long. I was hungry and went out to eat. I ran into the chum and be about to break it out. It's these changes, these changes, these something. It's quite the same. You feel it? Same. Beating the palms aside, something here to not near the places I've been. It's just a good time to roll, so much pleasure making you want to go back again. It's I did something only just to go down. The time to just have some it's time to see more. And it changes, changes, and it's something, and it's fine the same. You're all good, you're all going so. Should do jump on up. Sometimes say the ocean, I wish you would say love. So, so I can. It's nice to see me and what you say. Changes it, it's not the same. People all going soon. Everyone afraid to go. Thank you. That's all. Same old, same old. Wonder where's the time? We're all the same boat. We can all believe. It's it's breathe. We're always same boat. We say the same boat. One with the time. Drop the same road. We say the same. We are all. We've all been kicked and but you ain't gonna keep good man now. You can't run nothing hell. Stay like you can know your truth. What I do. We're always same. They say the same. One of the same time to go and see. And look to Not the same road. Sing the same stuff. We are. Yeah, you sing.
Oh, how's everybody doing?
Shots. Ain't me not. Don't say nothing else. I've been struggling to spread a little. To give back something, see everything driving, but all of we always say it's the same. Oh, I don't have to see time. The mother to gotta be the same. What you say on the same side.
Oh, they always have a good song that comes on right before you got to start. Good old Bob Marley. All right. Well, hey, good morning, everybody. Happy Friday. Let's get everything underway. A little cold up here in the morning. Not like waking up in Arizona, 100 degrees, 5 o'clock in the morning. All righty. Let's see what we need to do. Well, we had non-farm payrolls come out, and the market reaction wasn't as big as we anticipated. Okay, I was anticipating a much bigger reaction. Taking our first look at the equity indexes, we can see that the bigger movers right now tend to be the S&P and the NASDAQ. NASDAQ has had a pretty big move this morning. Um, Broadcom up $44, now tapping out 350 in the pre-market, up almost 15%. Okay, but we're looking at the other large market cap stocks, and they are not showing the same love, so to speak. Okay, so it might be just a one hit. Nvidia down $2.78. I'm not sure what the news is on Broadcom. Okay, but we are seeing a pretty good gap to the upside. Okay, almost like when you go out and look at the daily chart or larger time frame on Broadcom, you could see that this is clearly the place where we got a breakaway gap. We had the measuring gap. Okay, now today with price coming up here, we would be looking at the exhaustion gap. Okay, so an exhaustion gap doesn't necessarily mean that prices are going to reverse. Okay, it's just an exhaustion gap. You can have a few exhaustion gaps as price comes up into those upper ranges. Now, if you want to get a projection on where this thing might go, is you put a simple 50 moving average on there, and just like we did with some of the equity indexes, uh, mainly the S&P, okay, is when we're at all-time highs using Fibonacci price extensions, okay? So I kind of mapped out the range to the upside and to the downside for the S&P using Fibonacci extensions and using the last three swings that cross a simple 50 moving average. S&P pushing all-time highs right now, again, okay? And I believe the Dow not quite there yet, okay? Russell and the Dow tend to be very, very quiet. I was expecting a bigger reaction off of the non-farm payrolls and the potential for rate cuts coming up in a few weeks. Okay. And the Russell does have more upside, but on the smaller time frames, the charts are going to be a little bit challenging to navigate. So you may have to go down to very small time frames. If you do choose to use the smaller time frames, stick with the smaller expectations at this point in time. I did a Fibonacci price extension for the Russell on a daily chart, and we're eyeballing that 2438 level. Okay. 2438 brings us up pretty far on a 5-minute chart, and it gets us closer to the all-time high. Well, gets us closer to putting in some new highs after we get past these levels here. But we do have a prep screen zone, 2458. And with the Fibonacci projection there on the daily chart, the next one up would be 2550, 2571, and the all-time high would be above 2615-ish. Okay. So nice picture, nice example of that golden cross on the Russell and what the golden cross is supposed to do. Okay. Jumping over to crude oil, just talking about the golden cross, we did have the start of one, but now that it did not follow through. Okay. Let's see, let's make a couple of adjustments for our Globex range. Our Globex range is about 90 cents. Okay, price is dropping down, just wiping out a couple of these demand zones. Let's go out to the larger time frame. See what we have over to the left, and I'm gonna look for that leg base group of candles. Wow, just hit it right on target. Found some buyers that lined up with the leg base. And just to see if that's in the right location, we do have resistance across the board. Price came down into that buy territory. And of course, we were all watching the equity indexes for the bigger reaction. Okay, so we do have some potential buying opportunities on crude oil. Okay, but we'll use a smaller time frame to anticipate what that will turn out to be. So let's make the adjustments down here. Came out right like that. Wow, that does make crude oil Globex range wide. And when we have a wide Globex range, we anticipate the bear trap and the bull trap. Okay. So we got 6190, 6164. Let's just put that on there. I'm gonna plot the 64 there, 6190. And we'll look for a retest for an opportunity to go long, minimizing our risk, somewhere around that 6190. There we go, 6190 to 6164 range. That'll make a nice higher low on a small time frame as price tested the larger time frame demand zone within a buy territory. Okay. So 61.90, looking for an opportunity to go long on crude oil. Natural gas, always quiet on natural gas. We are right now, the Globex range is about 50% of the daily ATR. It's not a narrow range, but it does look like price has been in a smaller range, and now we're starting to move up. And the narrow range is actually good for the open range breakout trade on natural gas. Okay. And generally, when the Globex range is about 50%, I tend to back away from the open range breakout trade. I just see things that are a little more choppy market conditions. Okay. But at any rate, gold made a new all-time high this morning off the reaction of the non-farm payroll that came out. Okay. Coming back to the S&P, we're still putting in new Globex highs. Now, I don't want to imply that there's trading opportunities right here. Okay. Look at the Dow 30 stocks. They're still trading on pretty light volume. We also have 6 Dow stocks positive over 94 cents, light volume, and 2 Dow stocks negative over. So that leaves us with 4 positive times 2. Cash equals positive 8 at the moment. Futures are trading at 26. Futures relative to cash, futures are overbought by about 16, 17 points relative to cash. Okay. So we need to see some volume on the cash, pushing price, volume and price increasing, more Dow stocks getting over 94 cents in order to sustain that move to the upside. The key part about this non-farm payroll when it comes out in the free market is watching how the stocks react to it and also monitoring the volume. That's why it's important each morning to notice the accumulated volume on the Dow 30 stocks so that you can get a good feel whether the volume is light, whether it's normal, or whether it's heavy. Okay. Unusually light volume brings in a lot more volatility ahead of any economic reports that comes out. Okay. So the monitoring of the Dow 30 stocks and the volume helps you anticipate, is this the market conditions where you set your trades out a little bit further, okay, and wait for price to intersect with demand or supply, okay? Or is this, a slower moving market is a faster moving market? Now, when it's light volume, to me, that implies a lot more volatility and additional risk involved in trading, in taking a trade, okay? Oh, wow. Looks like the NASDAQ is approaching our prep screen zone. Now, if you own Broadcom this morning, let's just say you're long Broadcom, and you saw that Broadcom is gapping up 15%. Are you going to sit there and wait for another 15%? Or are you going to look to take some profits and do a happy dance? Okay. Check text or wow, was it earnings report? Okay. Yeah. Buy the rumor, sell the news. Thank you, bro. Yeah, so there's one large market cap stock that's moving the NASDAQ right now. Okay. And that's a very strong gap up. but being a Friday, and that's a big gift. So let's take a quick look at setting up our trade. Looks like we're not quite there. We're about 23,900. Is that what we just hit? What was it? Ooh, 998. Okay, so I'm going to come back in here. Let's drop down to the smaller time frame. I might need to splice into that. Yeah, I'm going to start off a little smaller with this one um, to anticipate a potential entry on that. And let's go over to the NASDAQ window over here and drop down to a tick chart. Tick chart can reveal many things. Oh, wow, went right up to that fair value gap with inside of a leg base. We have relatively low risk going into this, but we have to anticipate anybody that was short is most likely going to have to get squeezed out of this. Okay. So we're going to wait a little bit closer to market open. I'd love to jump into this right now, but we do have to anticipate that there might be another little push to the upside on the NQ. But you could take like 1 micro, but you're going to have to get, you know, just so you can catch a little piece of it. But your stop loss is going to be up there about 922, 923. So you have a little wiggle room for that, anybody that was short. So let's start off with 2 micros on this. And it's going to be pretty wide stop, and then we'll look for opportunities to splice into that if the market should pull back. Okay. So I'm going to hit 2 micros at the market.
Order filled.
And I'm going to use that 922, 923 as a protective stop loss. About $160 worth of risk, a big area for wiggle room. Okay. And yeah, we'll just wait for the opportunity to add on to that position as price pulls back. Now, a target range for this, an initial price target. Kind of using these range here. So for this short trade, target 1, target 2, and let's just pot out. So starting with 2 micros, my max risk right now is $160. Looking for potential targets down below. Okay. We'll see how that participates or how that all works out. Now, don't take such a large position that you can't give yourself enough wiggle room. Okay. There'll be plenty of room to the downside if they start taking profits on Broadcom. Okay. That was a very substantial move. On a side note, anytime you see a stock gapping up over 5%, that's pretty extreme. And now we got 3 times that. Okay. So anytime a stock is gapping up over 5%, that's pretty extreme. Greater than that is you're looking for profit takers to come in. So Broadcom pulling back down potentially with some profit taking. probably after a little bit of a squeeze. Um, we'll look for the NASDAQ to pull back as well. Okay, so our first trade out the gate is we're watching for the NQ. We're up slightly with two micros. Okay, and we do have some profit targets in place. Let's go out to the Dow. Dow is not quiet. The Globex range. We did have a night. Most of the reaction was done around the non-farm payroll, but we did see price breaking support earlier than the release of that. Okay. Now we have been also monitoring information around, the accuracy of the numbers for the non-farm payroll from the Bureau of Labor and Statistics. Okay. And some of the comments that came out today about the non-farm payrolls and things like that is the numbers are expected to get a little bit more transparent and easier to interpret because the data will become a little bit more accurate. Okay. It's kind of like some of the questions that were asked to RFK yesterday. It's like, how come you don't know the numbers? I said, well, because the numbers were all fake. Duh. I can't give you any accurate reading because we're still compiling that data. And a lot of the data was fabricated. So it's going to take some time to that. I am pretty bullish on the Dow price projection using Fibonacci price extensions, 46,145. Dow on a daily chart is also making a base here. Very strong potential for a break to the upside. Okay. We do have some crypto news that's coming out later in the session that we also need to pay attention to. That might cause the markets to rally, might cause them to drop, but being prepared for that. Next economic report is at 1 p.m. Baker Hughes, which is really not a big thing. NVIDIA stocks is in something of a rut. Okay. S&P NASDAQ, fresh records as Broadcom pops. Scotia Bank forecasts a goose egg for payrolls and firms economists worries he's being too optimistic. Okay. It will take a doozy of job reports to derail investors' expectations of a September rate cut. Okay. Oh, yeah, there's a lot of things in the news that was kind of 50-50. Okay. But being that the markets are at all-time highs, S&P, the Dow, sorry, yeah, S&P and the Dow are the ones closest to a new high or making a new high. NASDAQ coming up right behind them, and the Russell still has quite a ways to go. As we go through some of our information, let's go out and check the FX markets, the metals markets. Before we go there, taking a quick look at, that's why that didn't look right. There we go. All right, so we have the US dollar, the 10-year and the 2-year yield all correlated. Okay, at least in the last few sessions here. 10-year, 2-year yield dropping in price, US dollar dropping in price. Okay, that gives us an indication there'll be some good trading opportunities here. As we look at the NASDAQ 100 pre-market indicator, okay, we see there's a massive gap up, and that's probably a lot to do with Broadcom. Okay, taking that over here. want to keep a close eye on Russell. If this market does to start lighting up, Russell is going to give us Russell has a lot of upside potential here, but it's just timing your way into it after that big volatility spike. So if you're looking at your charts and you're a little confused on what you should be doing or what you want to do, you're not alone. Okay. Keep your contract size small. When the charts align and get back to normal, then we'll have plenty of trading opportunity. Okay. Now, as I'm monitoring on the small time frame, I'm noticing that the Nasdaq is still holding a high tide base, and so is the S&P. Okay. So the longer that price goes sideways up here and base is sideways, the higher potential is going to keep on going to the upside. Okay. So what I would like to see is price dropping down, taking the full range up here. And this is where Fibonacci measurements come into play, as when you have a high tight base, 23.6 or 38% retracement, momentum continues, the price direction continues to follow through. Okay. So with the Nasdaq, I would need to see it break the 832 before I sit back and relax. Okay. Price continuing to go sideways with a high tight base. And you could even take that lower range right here and you can see where we're at, the 23.6. Okay. Still a little bit more risk trying to take a trade short at this point. Okay. Things are a lot more, or still pretty bullish. Okay. So we needed to break the 23.6 and we needed to break the 38, and then we can come down and get that full range. And once it starts taking out the that 38% retracement, we'll have a good indication that markets are going to go look for buyers. Another key point to look for is back to the volume. Okay. Is the volume and is fair value matching up? When we take the measurement of cash versus the futures, we measure that out, are futures trading at a premium or are they trading at a discount? Are they overbought or are they oversold? Those are places we look to take positions and trades. Now, jumping back out, as we were talking earlier, sometimes non-farm payroll just messes up all your research. Okay. Japanese yen, yeah, price shot right up into supply. We do have a supply opportunity on the euro, just a little bit above the resistance. Swiss franc popped up. British pound is in the zone within a sell territory, and even went to a smaller time frame zone, just hit it nicely. Okay. We got crude oil. We didn't place a trade on that. Oh, didn't quite get to 61.90. So we'll see how crude oil starts setting up here in the next 4 minutes. Okay. Natural gas, small move on the open range breakout. Huge move on the 5, 10, 30-year bonds and notes. Massive move. Okay. NASDAQ is up in a higher time frame supply at this moment, approaching new highs. Okay, but not quite there. S&P 60-minute Fibonacci price projection 65.38, 65.47. Russell also popping up into supply zone, has taken it out with that volatility. And I don't have anything marked on the upside. Dow also at that resistance level we just saw on a daily chart. Fully expect the Dow to push or make a new high. We'll just have to see how the stocks perform when the market opens. Okay. So with the way things are setting up right now, the way things we have put together, S&P, that's a nice trade there. Let's start off with a couple of small micros off of that. So the stocks right now, we got 3 down stocks down, and we have 5 up. S&P futures are way overbought. We may have an opportunity for a short-term pullback. No, we're gonna have to wait. I'm anxious to trade just like everybody else. But we got to give this market a little bit more time. Gold also taking the break to a new high. And let's do this on gold. We got a couple minutes here, and we still need to wait a little bit longer. No, that's not going to be helpful. Let's just look at the last couple of swings in price. We have a swing down. Now let's take these 3 swings in price. Now, what I'm going to demonstrate here is, we're going to forecast where we anticipate gold for the next move to the upside. Using Fibonacci price extensions, take the last 3 swings. We're going to look for a confluence where the Fibonacci levels overlap. I'm going to use Fibonacci price extensions, and the extensions are anything greater than 100. So we have a swing down, and then we have another swing up. And one more. Markets are open. Okay, so a forecast, our first confluence level, looking for about 36.57. Up a little bit higher, 36.80. Okay, so we don't need to go too crazy on all that. But we start breaking out to the upside on gold. We'll look at these 2 levels here. All right, what do we got going on our, hey, there we go. Now we only took a couple micros. We're not out of the woods yet. No reason to sit back and relax. Things are pretty volatile. And I don't know if you guys have recognized different things that have been going on with your trading platforms the last week or so. We're seeing that I'm gonna stop the video here. We've seen a lot more of delays. We've seen a lot more kind of misinformation on the charts. Things kind of getting a little sticky. Let me stop sharing, let the things catch up. Bear with me just a second here. Charts are, there we go. Okay, almost to target 1 with our 2 micros. Broadcom pulling back about $7 already off the top. Like, there's not going to be a lot of buyers at this point. There were just no sellers, but there's not a lot of buyers unless they're buying to cover. All right, so the NQ did hit target one. And just taking a quick look around at the stocks, NVIDIA is still pulling back. Tesla, let's get a good focus on that. And a little profit taken on Meta. Yeah, one of the key things to remember is that futures follow the cash market, and the cash market is the stocks. Okay. And for a little less volatility, I am favoring more of a trade opportunity looking at the Russell and the Dow. But things need to settle just a little bit. We need to see what stocks are going to do. Crude, come on back down for us. I may have to splice in if we're, I mean, I'm liking the 60-minute, the larger time frame on crude oil. There's a potential bounce back up, at least up to that hold resistance area. I'm on a 5-minute chart and still need to wait for that candle to complete. Heating oil is not dropping, but it's not rallying up either. We use heating oil as a lead indicator, and right now heating oil and um, crude oil are both still kind of holding their own. Okay. I'm going to put the trade out there at 61.90. Let's see if we get that little pullback, and I'll come back and check on it. I'm willing to go long at 61.90. I'm willing to go long if price breaks above 62.37. $61.90. There we go. And our stop loss will be at 63. There we go. All right, can we get target 2? So right now we got a 1-to-1 trade. Our risk was 160 bucks. I mean, this thing is moving pretty quickly here. So we did have a 1-to-1. Reward was 160, risk was 160. And we're looking to see if we can get that target 2. Microsoft dropping pretty good there. Microsoft, Apple, and NVIDIA are probably the first 3 go-tos to see if the market's going to pull back. Okay. Microsoft is close number 3 largest market cap weighted stock on the NASDAQ 100. And if Microsoft and Apple are dropping, generally we'll get some follow through with the index. You see Meta is kind of holding its own, Amazon, Tesla, Alphabet. Oh, Microsoft, wow, just plummeting. And here comes Broadcom. So trade at your own risk, identify what your profit target should be. I'm gonna hold out just a little bit longer. Wow, Microsoft really tanking. on, target 2. All right. Bonds, notes, US dollars still continue to move a little bit lower. The trend has gone back into consolidation and the VIX is low. So there's not a lot of fear in the market. Actually, a lot more bullish sentiment right now. So don't get so comfortable that the market's going to fall apart. We're just getting them, people are just not willing to buy at the high prices here, and they may be willing to buy on a pullback. I'm checking the news over here. And traders are pricing in a 0.5 point Fed cut. I think a lot of that anticipation was priced in yesterday with the impulse move we saw. All right, Apple has started to pop back up. It's your choice right now. It's always your choice. I'm going to hold off on jumping out at the moment. I'm just going to monitor it. Actually, I probably should just grab the profit. We're starting to get a bounce back up on Microsoft. Apple's not selling off. Okay, so I'm going to go ahead and grab this and then just wait for another opportunity. See if we can get at least a 1-to-1. We're pretty close.
Order filled.
All right. I'm gonna leave that target 2 out there just in case. I want to see if it's going to hit. But the thing that we can watch and observe, learn from, is watching how the large market cap stocks influence the index. Okay. Now I don't have a place to go long yet. Market is still pushing high. We got the high tight base still going on. No more economic report. And now we do have Apple and Nvidia going in the same direction. At least on a 8-minute. Looking at all-time highs on the daily chart on the S&P. Let's drop down to a smaller time frame. See if there's a nice, easy way to pop into that other than just taking a breakout. We are forming that high tight base. But we could see that correction last a little longer, okay? Now, even though you got a high tight base and you're expecting that momentum to come in, take a moment and look at the cash value, okay? We got 9 Dow stocks that are positive, greater than 94 cents, and we have 1, 2, 3, 4, 5, 6, 7 that are negative. So that means 2 positive times 2 would be positive 4. Cash equals positive 4, and futures are trading at positive 28. Futures are overbought by 24 points relative to cash market at this point. Even though we're looking at a high tight base and price to continue up, we have to anticipate that corrective moves take longer than impulse. Okay. So right now, This choppy stuff is a correction, impulse, correction, potential impulse. Okay. But I've often got myself chopped up right in this range, getting ready for the breakout, participating, only to get stopped out once, maybe stopped out twice, stopped out three times. Okay. A corrective move, minimal, takes about 2 times longer than an impulse. Now you can see how the price is just chopping back and forth. Okay. So make sure you're aware of the prior controlling swing, not for trend, but whether it was an impulse or a correction move. Okay. Price often gives you an impulse and then it goes to correction. Impulse and correction. See, we still don't know if there's going to be a rally base and drop or if it's going to be a rally base and rally. I'm more inclined for the rally base rally, okay, with the daily chart being at all-time highs, okay? Another thing we mentioned in the pre-market routine, okay, our pre-market tips, is taking a look at the daily chart and just taking the last couple of swings here, or pivot highs. And notice we got a high point and then price pullback. So what I'm going to measure here is the distance that price moved away from the 50 simple moving average before we got a correction. So what we're going to do is take 3 of these measurements that have already completed. Okay, so let's grab that calculator. Let's find out what that average is. So we got 301, 239, 301 plus 239 plus, let's call 181 plus 721 divided by 3. You get about 240 points on average. So take that middle one and use that as a projected area for the average price distance. If price moves away from the 50 simple moving average before it reverts back to the mean. And that's putting us up right about that 66.19 area. Okay. 66.19, a forecasted area. Now, if you are looking for the potential price getting up to that 66.19, how would you get into it? Oop, there's that chop. Whip, whip, whip. I hope you're understanding that, I'm not taking a lot of additional trades right at the moment because the markets are still settling out, trying to figure out what they want to do. Okay. This high tight base is very tempting to keep trying to take a trade at the breakout. But as we just described, impulse versus correction. Okay. And let's see if we drop down to any smaller time frame for not. I still have, even on a 3-minute chart, I have no indication the price is changing trend yet. Just doing that high base, and we keep testing these little fair market value gaps. Taking a look at the Dow 30 stocks again. 1, 2, 3, 4, 5, 6, 7 Dow stocks negative, 8 positive. Leaves us with 1, so 1 times 2 is 2. We're about 22 points overbought on the S&P futures relative to the cash market. Also pointing out, Sherwin-Williams is up $7 on 238,000 shares. I mean, that's low volume. Okay. In looking at the volume on the daily chart, we have seen sustained volume as market has been basing up at this high point. But over the last three sessions, we did see a decrease in volume as price moved up off of this move here. So that produces a negative divergence. Okay. Price moving up while volume dropping off is a negative divergence. Crude oil doing nothing. Nat gas also. Gold making a stretch up to that higher level, 36.57. Already up about 1.19%, 42 points. Gold has now made another all-time new high. Dropping down to small time frame. Just trying to find a place where we might be able to make a trade comfortably without a lot of risk. Remember, much of this move that we're looking at and watching was done on the higher time frames. Must be some news coming out. A lot of political stuff. Okay, so in our Mastering the Charts recap and review that we do every Wednesday, and in our live trading rooms, and some of the lessons that we've been covering have evolved into studying the fair value gap. Okay. Now there's a couple of things that I use a small workspace here, small time frame, 3-minute chart. Okay, in watching for the fair value gap. Now the fair value gap is just a 3-candle pattern that we look for and is most often more beneficial, not in reversals, but in momentum or trending markets. Okay, whatever time frame you desire to participate in, we look for that 3-candle pattern and we use it to, well, we can use it for about 4 different applications. When you're using that technique of the fair value gap, okay, and you're also using some of the I'm trying to remember some of the other things that are out there. You need to know what you're using it for. Okay. Now the fair value gap can be used for entries. Okay. It can be used for profit targets, opposing zones. Okay. It can be used as trade management, adding into a momentum or adjusting stop losses. And you can use it when you have a fair value gap inside of the leg base, and that's more around the reversals and start of bigger trends. In using, and probably a fifth thing, in using the fair market or fair value gap is you stay out of this chop until price gives you clear directions. Okay. Now hindsight's always 2020. Okay, you can see it very clearly. And we're just coming down to a small fair value gap right there, that 3-candle pattern right there, about 520, 29, 3/4. Make a quick little difference. So in this example, I'm going to exploit using the fair value gap as a trade entry. Nope, it just wiped it out. Okay. But even on the small time frames, if you're not getting confirmation of the trades, now let's start off. I'm gonna keep everything really small right now. We're gonna keep this on like 2 micros. It did overshoot. Let's come in at 65.30. And I'll have my stop loss at this last low, 527. A couple of micros, we got $32 worth of risk. Don't have anything over here on the NQ. It's almost like making a megaphone. You have higher highs. Yeah, when you start building that megaphone, you always want to see that they call it a, what do they call that? A liquidity gap where you see that last little throwdown to find any buyers at that level. And that's kind of what we did. The fair value gap was in the same place where they have a liquidity trap. Some traders might have even tried to take the breakout. There's a lot of people trying to make something happen this morning. Okay. Make sure that if you're going to try to trade, keep it at 1 or 2 micros. Do not make it too, don't try to go load the boat. Okay. We're still seeing a lot of volatility here. Crude oil slowly drifting. Oh, nice. Russell's coming back. Being well versed in many different techniques for different market conditions, okay, is very helpful. Okay. Not all techniques work in every market condition. In looking for supply and demand, it's kind of hard to find today. Okay. I mean, demand zone should be below this tail, supply zone should be above that. Okay. So that's why I'm changing up strategies a little bit just to find some opportunities. Okay. Larger time frame, nothing. I do want to point out that the reaction for many of these for the non-farm payroll, price did come back down into the leg base group of candles. You never want to give up on that. That's when you want to know why price stopped here, just look over to the left. All right. Any questions, any comments, things like that? Let's see if I just want to double check. Yeah, please like and follow. If you're watching on the YouTube, give us a thumbs up. Let us know what you think. Equity indexes are not easy to participate in. I'm just going to keep cycling through some of this information here. Larger time frame, man, that S&P was in a beautiful spot. Nice little forecast, and same with the NASDAQ. But we've only got one candle pulling back. We don't have We have to go down to a smaller time frame to splice into that. S&P and the NASDAQ did hit, S&P hit a Fibonacci forecasted area. NASDAQ hit a supply zone. Dow ran right up into resistance, and that's holding at the moment. And the Russell still looking for, I'm not even sure what we're looking for on the Russell just yet. Aussie dollar approaching supply. Take a look at the US dollar to see where it's at. Is the US dollar in demand? As we kind of get a quick glimpse, I have a US dollar on Trading View. US dollar still looks like it's going lower and it's breaking that support. Okay. So if the US dollar is right at support, not a zone, okay, then we have to anticipate if it breaks that support, Aussie dollar is going to break resistance. Same at the British pound. US dollar breaks support, British pound's going to take out that zone. Okay. Swiss franc is already in the lead, taking out one of our supply zones and pushing up to the next level. Dollar breaking that support area should get the Swiss franc popping up into supply. Japanese yen is already in supply, but not the time to take the trade. Okay. And why? Well, we're using some things outside the price chart. Okay. Like the US dollar. The dollar and the FX markets are inverse related. Will be kind of interesting to see how things do change up if the dollar is no longer the reserve currency. All right, crude oil coming for us. We still have an open order at 61.90. There were some buyers down here. We got a nice price reaction off the non-farm payroll and then a reaction back up. So we'll see if there's any more buyers at this level. The internals, extreme complacency on the VIX. We did have some buyers coming in this morning on the tick. We didn't have any yesterday. And now things are quieting down quite a bit on the NYSE. Now, yesterday was an impulse move, correct? 10 o'clock reversal on the yes. I just don't think there's a lot of willing buyers at all-time highs. And we're just now hitting on a 2000 tick chart, we're hitting that fair value gap area. NVIDIA and Apple are going opposite directions, and we're just getting a pullback on the bank index. Looking down here at the SPY, below the moving average. What type of gap did we have on the exchange traded funds this morning? Anybody know?
Order filled.
Did we have a downside breakaway gap? Looks like we just got filled on crude oil. No, we had an exhaustion gap. All right, crude oil hit our 61.90. My stop loss immediately is at 61.63. I have $140 worth of risk at this moment. Okay. If I feel that the risk is getting too big, that's going to be based off of what we're looking over here on heating oil. Okay. Heating oil breaks that last little, the higher low. Chances are it's going to take a little bit longer for crude oil to make a change. We do have some demand down here, but heating oil tends to lead crude oil, and if heating oil is breaking down, we'll see that crude oil follows it. Okay, right now we're getting a small bounce off of that area. Okay, so we'll monitor that. So if you start to watch, I do have a smaller time frame, so I'm watching this real carefully here. If we start to see heating oil put in a green candle and pushing higher, that would be a good thing. But if it starts breaking lower or forming a red candle, then the risk is increasing. We can get out with a smaller loss or a smaller profit. Looks like you're getting your bounce on the S&P. I think we were looking at that. Talked about the 10 o'clock reversal. Price did come back down into that fair value gap area. Got a little bounce off of it. Okay. But with the bank index pointing lower, okay, below the moving average, and I kind of use the bank index as an odds enhancer. The BKX is 24 national regional banks all into one index. Okay. NVIDIA, a large market cap stock, is still pushing lower while the Apple is pushing higher. When you have those large market cap stocks going inverse direction, it's letting us know that the market conditions are a little bit bumpy. Okay. A little bit bumpy. They're not the easiest trading environment for me to participate in for my trading style. That's why I'm sitting on the sidelines a lot. With the use of that fair value gap, I don't have any signals on the down move and I don't have any signals on the up move. The tails keep overlapping each other. Therefore, they invalidate the potential of momentum down or the momentum back up. Looks like we're getting a good move on crude oil, though. Boom. Yep, see heating oil got a nice little pop. Ooh, Russell coming back down for us. Russell holding that fair value gap area. IWM though. Remember, stocks move first, exchange traded funds second, and then the futures adjust. So um, I'm using the exchange traded fund as an odds enhancer to whether I want to participate in Russell. I'd like to see Russell move to the upside. Okay. Momentum to the upside. We got a lot of upside potential. But if the exchange traded fund is going down, the futures will follow. Always remember, futures are a derivative. They follow the cash market. So you can use some additional odds enhancers, things that are outside the futures chart. Because remember, the futures charts are just a computer matching what the exchange traded fund and the stocks are doing. Okay. Futures derive their price from the underlying um, stocks and exchange traded funds. Let's go back and look at the Dow. Now, one of the toughest parts is when this type of trading environment occurs on a Friday. You don't want to end up giving back your profits for the week by over trading. Yeah. It's going to take a great deal of patience right now just to wait and let the market set up. And I'm just kind of talking to myself at this point. I know y'all can relate. It's like, okay, what should I be doing? I can't find any trades. I'm getting more frustrated. This guy I'm listening to on YouTube is not giving me any good trade opportunity. Well, actually, we did give you a couple, but we kept our position small. Okay. We know that the market conditions are not the greatest right now, and he keeps telling me to wait. Well, we know what we're waiting for. Okay. And when the market is not giving us a clear signal of whether to step in and take the move momentum down, okay, right now it's just a gamble. Yeah, you could take it short, okay, but as soon as you do, it starts bouncing back up against you. As we start looking at the potential for a fair value gap within that momentum, we can see that all of the three candle patterns have been negated, okay? On the S&P, we do have a demand, nice demand, 64.95, okay? And on the Dow, wow, we're looking much lower, okay? But we still don't have any clear signal as to where to get into this. We have made a couple of the leg base, group of candle, okay? But we would still need to see price come back up into that range before participating in the short. Now, man, looking at the daily charts, I'm just still remaining bullish. I'm not seeing any place to get in for a long opportunity. I'm going to move my stop loss up to the Globex low. I'm just not seeing a lot of follow through on heating oil. So I'm going to reduce the risk from 140. I'm going to reduce my risk down to about $70. And if I see that heating oil has broke this little support, I'll have an opportunity to get out with either a smaller gain or a smaller loss. Yeah, a little bit of profit taking on Broadcom there. dollar is starting to bounce a little bit off of that support area. The 10 and the 2-year yield have bounced. But again, the 10-year and the 2-year yield prices, along with the dollar, if you look back here, that's an impulse move, impulse to the downside. Okay. Impulse leads into correction. Corrections take a lot longer to process than an impulse. The 5, 10, 30-year bonds and notes also had a strong impulse move for the last hour and a half, 2 hours. Okay. Where now we're going to expect a correction. When you start getting into that rhythm and understanding of what is an impulse versus a correction, you have to take this a little deeper as well. Measure the average time or average duration of a correction after an impulse price move. It is more rare to see an impulse up and an impulse down. Okay. Doesn't happen that often. Wow, SPY's come down to fill the gap. So let's just see what we can do. Let's drop down to a little smaller time frame. I just dropped down to a 2-minute chart. Looking back through here, all the tails have overlapped. Except for this one up here. I also want you to kind of observe what I'm doing at the moment. I'm going smaller time frames. I'm looking for a trade opportunity. Okay. Does it feel like that we're kind of pushing a little bit for that trade opportunity? Keep going smaller in time frames, keep looking, keep getting those emotions of missing everything here. Okay. When you have those emotions, those feelings, along with your pre-market routine and your information gathering, you'll quickly realize that you're kind of putting yourself, you're going in circles. Okay. You know, when there's a good trade opportunity, everything lines up. The emotions are calm. They're not complex. You just take the trade and accept the risk and potential reward. Okay. Kind of like what we did on crude oil. We took the trade, we set it up ahead of time, you know, an entry. We're looking for some confirmation of the heating oil as we're now in the trade management. We did have trade identification, which was a zone. We had a large time frame. We had things that were outside the price chart. Our large time frame on the 60-minute chart gave us the a zone that we just came down and tested. We went to the smaller time frame. See, what I'm getting at is that we really methodically just went through collecting information about crude oil, about what it's doing, the price chart and things like that. It was a pretty easy trade. Now, it doesn't mean it's going to be a profitable trade, okay? But everything was there in a line, okay? As we keep looking at the equity indexes, it seems like we're just spinning wheels. See, we got a nice move down, and yeah, you could have just hit the button and shorted, okay? Some people do that and they do it well, okay? But if you have a strong method and approach to the market, okay, then you're going to be waiting for your trade setups. And when the trade setups are not there, that's generally when the traders feel most emotional. Okay. I still have information outside the price chart with Apple and Nvidia going inverse that things are not right. They're not aligned. S&P futures are down about 10 points. I have 1, 2, 3, 4, 5, 6, 7, 8 Dow stocks negative and 5 positive. So 3 negative times 2 is -6. Cash equals -6. Futures are trading at -12, 13 right now. Futures are oversold relative to cash. So oversold relative to cash, we're going to look down for a demand zone. Okay. Well, we do have that leg base that markets have reacted off of earlier in the session. Okay. Price is coming down to find potential buyers. Okay. My first level of potential buyers is going to be about 64.88. Okay. It took all this time in the pre-market for the things to start to line up to give us an idea where we could find some buyers. Okay. Back to the upside. Here on this little larger time frame. I would make my target right now about that 65.29. All right, so as I'm lining up the S&P, at first glance, I'm going to set up small positions right now. Okay, small positions, no more than 2 or 3 contracts. Okay, micros, micros, 64.88 and a quarter. I think I'll come in 1 tick above that. Okay, 64.88 and a half is where I'm going to place a limit order to buy. 64.88 half. Boom. My initial stop loss is going to be 64.78. Well, let's call it 64.79. Okay. What we can clearly see is if we enter at 64.88 and our stop loss is at 64.78, we have about 10 points risk on the trade. Now, 10 points risk on one micro is going to be about $50. Okay. 10 points risk on one mini contract is going to be about $500. By having a place you plan to enter, okay, you can identify the risk on the trade prior to getting into it. By understanding the risk, you can say, oh, yeah, but my trade plan says never risk more than $200 on a single trade. Fantastic. It can be any number that you decide based on your trading plan. But if your risk in your plan says you can risk $200, okay, then you would be able to trade 4 micros with that current risk. You size your position per your trade plan, not per my trade plan, but per your trade plan. Okay. Let's see what we got setting up on the larger time frames on the NASDAQ. Oof. All right, so let's put the little blue dots on here, make it a little easier. Find a leg base, leg base. Wow, it's way down there on the 20-minute chart. Let's drop to 15, see if we have anything in the middle there. Okay, 15-minute chart. Okay, got a nice leg base group of candles. Let's continue. Let's go on 10-minute chart. No change on that. And down to a 5. Yeah. Good morning. Okay, I'm working right now. All right, so my computer's locked up just a little bit. And we'll drop down to a 5-minute chart. There we go. That little leg base. Right there, right there. Okay. Now let's go back out to our larger time frame. The little blue dots are just the base candles. And we're looking for that group of candles, leg base, leg base. Now, somebody on a larger time frame would say, that's a little base rally thing. And they're right. Okay. But inside of that, I wanted some very specific details. Okay. Now, this is getting pretty, if we look over at the tick, Q, which is the upticks over the downticks on the NASDAQ 100, NASDAQ composite, we're extremely oversold.
Order filled.
Prices dropping right into that leg base. Setting up that trade right now. And my opposing profit would be about 826. My risk is about 18 points. I'm going to place the order to go long. 23,638. Let's go 639. My initial stop loss will be at 620. Okay, so trade is set up. I heard an order filled, so let's go back over the S&P. And we have our stop loss at 78. We have $187 worth of risk on the trade. That fits within my parameters for my trade plan, $200 on some micros. Okay. Now let's use some information outside the price chart. Okay. Now, you might say that, well, you're making it so complex by explaining everything. Look, these are for educational purposes. They're not me making recommendations. The things I'm describing are to help you understand if you should participate in the trade by understanding your risk, your potential reward, the timing. Okay. So we want to be able to approach the market in a very methodic way, managing our risk and looking at our potential reward. So the other thing I want to check right now is I want to see, is the tick in a good place? Okay. The tick, $TICK, is the NYSE upticks over downticks for the whole New York Stock Exchange. I want to see this start to turn bullish, and I want to see it go back above zero. That tells me that across the board, they're stepping in to be buyers. I also want to see if futures are oversold, S&P futures oversold relative to the cash market. So we take the number of Dow 30 stocks that are greater than 94 cents positive, greater than 94 cents negative. We net the results. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Dow stocks negative over 94 cents, and we have 5 that are positive. The net result is we have 5 negative. We take that 5 negative and multiply it by 2, and we get negative 10. Cash equals negative 10. The futures are trading at negative 24. S&P futures are oversold by about 14 points at the moment. Okay. So when price starts bouncing back up, okay, we have limited upside. It's not like it's just going to go right to the moon. Okay. Price tends to go back to where we're going to balance out. Okay. I think we just got hit on the NASDAQ. Boom, boom, there we go. We need enough wiggle room because the markets are starting to get a little volatile here. But trading is, stop losses are real in trading. Okay. They're really important, but also is timing your entry. Okay. Knowing your risk ahead of time. So I hope that you come back every Friday or even join our live trading room where we do this together, our Mastering the Charts recap and review, which we do a little bit more explanation, a little teaching in that. Okay. And of course, our content and how we describe all of this using the leg base group of candles for eyeballing a place for you to participate in going long or short. Okay. Let's see what we got going here. All right. So we did get a nice little move. We're right at the bottom of the hour. Yeah, S&P is a little more sluggish. NASDAQ coming in hot and heavy. We still have risk. We're not out of the trade yet. Yep.
Order filled.
Stopped out. I didn't exceed my trade plan. Maximum risk. Now, I am stopped out on the S&P, and in order to splice back into it, I'd have to use a different technique, either examining this to see, hey, is that one of those V-shaped reversals where the point A down here would have to align with a Fibonacci price extension? If it's a V-shaped reversal, you usually end up with a 224, 2618, or a 314 extension. There's the 314, and we're right there at the 261 point, or 261.8. Okay. It is not in a zone. So either a new zone has to be created, or we need to find a different way to splice into this by waiting for that potential a fair value gap or a price to develop. If it's going to be a fair value gap and you're on a 3-minute chart, we're just forming the first candle. So that means I have another 6 minutes, sorry, another 7 minutes before I'll be able to get into this trade. Meaning I've got to wait for a 3-candle pattern to set up and develop. Okay. So I got about a minute left in this candle. Then I would need to see a big candle pushing price up and then another small base candle with preferably a gap in between. So we'd have an opportunity once price dipped back into it to participate. So we have time to wait on this. Okay. And that's the 314 area that I was watching for the potential of V-shaped reversal. Sometimes when you know the amount of time you have to wait for a trade to set up and give you that entry, okay, it can be easier to manage expectations. We still have risk on the NQ, and our crude oil trade is right there. We have broken that level on the heating oil. I'm going to exit the trade right now with a very small gain,
Order
and
filled.
we'll wait for things to reset up. Let's see what we got going on to Russell. Russell getting a nice move down. Let's find that. Oh, wait, we already had Russell came in and tested that leg base, leg base. Dow. Okay, Dow is coming back down. Dow is a really nice area here, being that the zone is in the right location for more of a stronger move back up. Okay. Dow looking to enter 35 or sorry, 45,302. Stop loss 45,219. Okay. Boy, this market is just not giving us a great entries here. Profit objective, if I'm filled, will be first target about 45,560. Now, banks and institutions are completing their order flow for today. And we got about 28 minutes left before the order flow is complete. Okay. Banks and institutions complete their order flow between 8 a.m. and 11 a.m. Eastern. Okay. If you guys are up to it, I'm gonna keep on going for till that just a little bit longer so we can get some good trades, potentially get some good opportunities. Okay, but looks like the Dow still needs to pull back, which might bring the S&P back down just a little bit further. And S&P zone is quite a bit of ways down. We do have another leg base inside of this range. There it is. $64, $68. Now that's going to put pressure on my NASDAQ trade. Okay, unless things start to change. Okay, I'm potentially going to get stopped out on the NASDAQ. Okay. Ooh, almost. How we doing on crude? Did we stay in? Just a little. We're already out of crude. We just have the NASDAQ. We have an order to go long on the Dow. Let's get that order out there. 45,302. Stocks are they're not just dropping off, they're just slowly doing nothing. Candles have gotten pretty small. Waiting to see if any buyers are going to step in these markets. Even on the tick charts and the small time frame base charts, we do not have a strong move up yet. So we're just going to be hanging out until we get a little more confirmation. Now, this would be a great place to stay in the trade. Now, first target on the NQ. about 735. And the second target will be back up around 854. So the should have stayed in that short from this morning, huh? And we got another shot at the S&P
Order filled.
6468. Okay, we did get stopped out of the NQ. Boy, markets come back right to where we went long yesterday. How you guys doing out there? Everybody okay? You guys are all kind of quiet. No questions today. Yeah, I've got a little bit over. I want to catch that bottom with everybody. There's a lot of potential move back to the upside. Let's just go over the zones where you guys can look for that opportunity. Okay, let's start off with the S&P. Now we do have some trades up there already, or set out there, just about ready to trigger on the S&P. Missed us by about 3 ticks so far. Okay, S&P zone 6468, 6454. NASDAQ zone that we're looking for 23,574, 23,511. Dow 45,302, 45,219.
Order filled.
Russell, we got a ways to go on the Russell. Well, it came down. This is where they exposed the buyers this morning. Have to see if they're there. What did we get filled on? We got filled on the S&P. Stop loss 454 in place. Now we're just waiting for the others to line up. All right. I hope you guys have a happy Friday. Continue, don't get into over trading right now. I mean, we're methodically looking through some good trade opportunities. Okay. If you want to understand more about the lake base, fair value gaps, any type of education, we can find it on our website. And I always want to recommend Elite Trader Funding and some of the prop firms that are out there, especially Elite Trader Funding. Get out there and get your accounts funded. Make some additional money. All right, everybody have a good Friday. Happy Friday. I'm going to wrap this session up, and you're starting to see the stock starting to turn. It's going to take just a little bit. That's why you give it the risk. Okay, because once price starts to turn, you need the stocks to turn to go along with it. All right, everybody have a great day, and we'll see you next week. Bye now.